Good morning. This is George Kachuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. So here we are, another Monday morning, October 7th. And again, as these last few Monday mornings have been, we see a big sell-off. The Dow was down about 150 points. It cut that in half right now. So let's take a look at the equity markets and what's going on underneath the hood. Well, if you look at the Dow market looks very bad. Looks like it's correcting. If you take a look at the S&P 500, also not looking that good. In fact, on the S&P 500, we have about 6 distribution days. Distribution days are days of heavier selling. And when you get that many days, it's sort of a caution sign that we may indeed spill over into a correction. The big however here is, if you look at the NASDAQ hit a new high last Tuesday, a 13-year high, and it actually still had a new weekly closing high. We look at the S&P Mid-Cap 400, also had a new weekly closing high last week. The S&P 600, which is small cap stocks, also a new closing high, all-time closing high last week on a weekly basis. And we look at the Russell 2000, the broadest measure of small cap stocks, also new closing highs. So basically what this market is telling us that there is some belief coming into this market, and the rotation is out of the blue chip stocks all into the small cap and mid cap names. And that's typically what you can see in sort of a mid sort of bull run here. So that's just something to be aware of. Still need to be cautious because, of course, we're going to be headline driven. The big headlines this week, of course, will be the budget battle in Washington. And, of course, earnings season starts this week, tomorrow, where Alcoa traditionally kicks it off. So, like, as usual, need to watch price and volume. Now, the themes in this market still continue to be medical stocks, biotech and drug stocks, internet stocks, domestic and Chinese, leisure, travel, leisure gaming, software sectors. And the oil explorers have had a very good showing, the U.S. exploration companies. So you might want to keep your eye on those. Now, one of the stocks I want to talk about that's given us a potential setup is NetEase. NetEase basically was a Chinese software gaming company, and pretty much just been consolidating over the last few years here, moving sideways through 2010 through that sort of 60 to 45 area. And again, last year too had a big consolidation. However, in August, it recently broke out to a new high of 77, and again started to base out again, which is showing a lot of support right around that $70 level. So I think this stock, you can try to pick it off here right in these low 70 areas, 70, 72, and if it persists to trade below 68, this might not be the right time for it to trade. Now, what makes this stock attractive right now is the fundamentals have greatly improved. Last 3 quarters, earnings were at plus 18%, plus 16%, and last quarter beat all estimates to coming in at positive 30%. Revenues came in at a positive 27%. Analysts are looking for revenues for 2013 to be up 25% and up 11% for 2014. Now, the big news, what they did is NetEase signed an agreement with China Mobile, which is the biggest mobile provider in China. So it gives it, and what they're going to do is provide free voicemail and text messaging, and it gives it immediate access to about 177 million users. So this has an interesting setup. You can try it here at these lower levels. It'd be sort of like a low risk entry, or you can wait to see till the base completes, till it takes out that 77.5 area high and try to go into it there. But as always, you need the market at your back, so watch price and volume in the market as we go on this week. And as always, have a good trading day and a good trading week. This is George Kachuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. Thank you.